Morning, everyone. Thanks for joining. Yeah, so we've got Pat here joining us. Want to talk through discovering sort of key insights to enhance your advice strategy, specifically talking about underwriting. So the way we're going to sort of start this off is we've recently launched a new pilot, so we want to touch on that and how that'll sort of benefit you. And then we're going to talk about sort of pre-valuation checks, what you should be looking at before you submit a case potentially. And then some of the points on criteria that potentially hold up cases. So we're going to look at sort of leasehold, service charges, home improvements, and things like that. What you can be potentially doing to get the case through efficiently. We've also embedded a new underwriting process recently, so we want to just sort of touch on that briefly. It's more proactive from us, so hopefully, once again, it'll help you and us get the case through as quick as possible. And then we're going to go through some recent criteria changes that we've hopefully come in the next week or so. So we're going to talk through them. And then we're just going to open up the floor for Q&A. So hopefully there's some things you've got to bring to the table. Feel free to ask any questions throughout as well. It'd be great to have it interactive as much as possible. So yeah, I'm Isaac, the BDM at Standard Life Home Finance, for those of you that don't know me. And Pat, if you can introduce yourself.
Yeah, of course. Morning, everyone. So I'm Pat. I'm one of the underwriters here with Standard Life. I've been with the company about 4 years. Before that, I was with Pure Retirement, and before that, I worked for HSBC. So I've got probably about a decade's worth of experience now in underwriting. We'll get cracking, so we've got quite a lot to get through. So I'll talk about the pilot that we've started recently. It's been something that's been like a pet project of mine since I joined the company, that I didn't feel we did enough pre-valuation checks. We were getting cases in and everything just gets automatically sent to valuation. Even if just doing a sense check on it, within 10 minutes of picking up the valuation, you can tell that the case isn't going to be acceptable and it's not going to go anywhere. So obviously that's, from a manpower point of view, it takes up a lot of time. From a cost point of view, we're spending money on valuations. That money could be better spent elsewhere. And also from an advisor and a customer point of view, it's not the greatest journey. If you send an application in, we instruct a val, we wait for the val to come in, then that gets assessed and you get a decline. If we could have picked that up within the first couple of days of the application coming in. So we're trialing with certain firms at the moment where their valuations won't be instructed when the application comes in. It gets a sense check from an underwriter first. It also gets a sense check from our support team, who do checks on the actual applicants. The way it works is the underwriters do checks on the property. The support team do checks on the applicants. So we'll both do our checks, and only then, when we're happy the case has got a good chance to progress, we'll instruct the valuation. If we're picking up things that are a bit grey, not specifically outside criteria, but might be a concern for us, we're referring cases to the funder to see if we can get approval pre-valuation to proceed. And we've had a bit of success so far with some, which have been able to proceed, and some have got declined, but that means that we can get back to the broker and the applicant quicker to let them try and place the case elsewhere. So the sorts of things we're checking are land reg for any title issues and boundary issues, things like that. We'd do a flood check. We'd look at location, obviously, proximity to commercial, substations, pylons, that sort of thing. We'd do a check to see if it's a listed building. We'd do a check to see if the property's currently been listed for sale on Rightmove, or it's been listed recently. So there's a wealth of information on those listings if it has been. We're looking, is there any planning permission been granted recently, or are there any planning applications that have been put in recently that's still outstanding? And all that information can build up a picture for us to give us a good idea of whether it's a case that we're going to be able to accept once we get valuation. The only thing we can't really tell at the moment is things like construction types and single skin, things like that. We can gauge pretty well flat roof and things like that from looking at Google Maps, but the actual construction of the property and that side of things is probably the only thing that we can't pick up at the moment.
Just on that part, what sort of things would you say at the moment you're seeing where we are declining them before they get to valuation? What would be the main thing, would you say?
Um, Flooding is a big one. If it's
Hmm.
in flood zone 3 or different people use different
Yeah.
ways of assessing it. So you got different maps in Scotland, Wales, England. So that's probably a big one, but we have had a few that have been outside criteria that we've sent up to the funder. And on further investigation, they have said they're happy to actually let it go to Val and see what the valuer's comments are.
Yeah.
A lot of proximity to commercial, a lot of proximity to pylons, things like that. They're the main ones that we're picking up that we've been stopping.
Okay. Well, on that, I'll make sure that everyone in attendance, I'll get the flood checker we use sent round. I suppose it's important because there is multiple lenders that all use different ones, so I know it can be confusing. If you want to run some pre-checks on that, alternatively, you can always send them across, using, one of the sourcing inquiry tools or, an email like some do. So yeah, sorry to interrupt you there, Pat.
No, it's all right. As before we sort of move on and start talking about anything else, has anyone got any questions on that? Does anyone got any feedback on whether they think it's something that they would find useful? I mean, obviously, from our point of view, it's a time saving factor and it's a money saving factor, but we're sort of doing it as well from a customer experience point of view, is that we don't want a case sat on our desk for 2 or 3 weeks before we decline it, if there is a chance to decline it earlier on. And also, hopefully, if it does go through our pre-checks, it's got a better chance of progressing. No questions. Do you want to move
Yeah, I
on?
think ultimately, it is a good, change that hopefully will come into fruition soon. It does promote a better customer journey. It'll keep if we are going to decline it ultimately, it's better to know early, and you can look at other lenders. Obviously, there's some for us. Sorry, there's just a question in there. So, we don't use the same one as air sourcing, I don't believe. So we use the Gulf UK one. So unless they do use that, then we will do. But I can send it round. What we're looking for is if it's low, medium, high on surface water, we can accept, but there is some conditions that will be added to the offer. Medium, high on rivers and seas will be a decline. Pat's going to touch on flooding, and it did change recently the criteria on that, and that is already enforced. But yeah, we do use a different one to where, and like I said, I think all lenders use different ones, or a few use different ones. So it's good to know which lender's using what really, if you are potentially going to put a case our way. Yeah, so thanks for touching on the new pilot. So I'm just going to sort of move into criteria that can hold up cases.
Isaac, just stop you there a sec. I think we've got a
Sure.
question in. I'm not
Yeah.
sure how to access it. It popped up and then it's
Yeah,
disappeared.
that's fine.
I think it was, if I read
It's
it
put.
correctly, is it about single skin?
Yeah, what percentage? What's your single skin percentage allowed?
Just let me double check that that's not one of the things that's getting amended.
No problem. Does it depend on habitable space as well?
Yeah, it depends what space it is within the property. If it's something like a utility room or something like that, it would be discounted.
Hmm.
So it depends on the my system's not working.
Right, we'll come back to that one.
Yeah, we'll come back
Sorry
to that.
about that, actually. But yeah, so we're going to touch on sort of criteria that can essentially hold up the case. We want to make sure you're aware of this sort of pre-submitting a case to us and what maybe you should be looking out for. So one of the things that I tend to find and I get feedback on is leasehold properties. We do have a differing process to all the lenders. We do want to be looking at, we do want to be doing some form of lease checks prior to getting the offer out. Sometimes we can sort of, especially on a purchase case, we can look to offer and condition the offer, but for the most part, we do want to be doing those checks pre-offer, the same as service charges. So Pat, just on that, don't know where Pat's gone. Just wanted you to run through that for me, please.
Sorry about that. I'm back.
So
Too many things open and it just crashed and gave up the ghost.
Well, you just left me. Yeah, so we're
Sorry,
talking about leasehold properties, Pat, and how we do our checks pre-offer. Sometimes that can cause delays. So I don't know if you want to elaborate, but from my perspective, if you are doing a leasehold property, if you can get the lease over to your client solicitors and get them to forward it over to Enact, because we will be doing lease checks prior to releasing offers for the most part. But yeah, sorry, service charges, estate rent charges, that sort of thing. If you can elaborate on that a little bit more, please, Pat.
Yeah, so as I said, if we can get a copy of the lease as soon as possible so that our legal team can complete their checks, that always speed things up. With regards to service charge, estate charge, if you can provide a document that evidences what the charge is, the breakdown of what it's for, how the charge is administered, whether it's a third party management company or whether it's a resident run management company, all this information sort of tells us a lot about whether the case is going to meet our criteria or whether it's one that we need to refer or would fall outside criteria. So the sooner we get that, again, the better. We have had cases in the past where we have conditioned for this information post offer. We really try and avoid doing that if we possibly can, because it almost always causes problems. If we generally don't get the lease and get all the information we need within the first couple of weeks, there's generally a problem there. I had quite a few cases recently where there's been missing leases, and unfortunately, if we can't get hold of a lease and it's missing, we can't proceed because it's just outside the risk appetite, that there's something in that lease that would affect our security if we were to proceed. Exceptions to that would be if it was a new build property. We appreciate that there might be more difficulties obtaining things where these charges haven't actually started or been implemented yet. So there's a little bit of leeway there. But if it's a remortgage and the applicant's already been in the property for quite a number of years, we would expect to be able to get hold of the information that we need.
Brilliant. And then I suppose on home improvements, because that sometimes can cause some form of delays. What sort of thing are you looking for there, Pat, when you pick up a case?
Yeah, so our criteria is quite all-inclusive compared to some of the lenders. I do know that. We do ask for a lot of information. That is purely because the issues we've had in the past with home improvement cases. So it's something we look into quite a lot, and the funder does take it very, very seriously, classes it as very high risk. So any type of extension, whether it's an extension on the back or going up, if it's a loft extension or anything like that, we would need planning permission. If planning permission wasn't required, we'd need confirmation from the local authority that a lawful development certificate was obtained. We need confirmation that building regs were covered, and then we need plans, building spec, which is all reviewed by the valuer. We need to look and see that the floor space isn't being increased too much. It's not going to be in keeping with the area. We need to look and see if flat roof is being added that would go outside our criteria. We need to look and see what materials are being used. I've had quite a few extensions where they're planning on being timber frame and timber clad, which would be classed as insubstantial. So it's not something that we would agree to. Depending on how big the project is, we need to know things like whether the applicants will be staying in the property when the work's ongoing. If they're not, has the insurer been informed, and is the property still insured? And then there's a financial aspect to it as well. We'll only consider structural home improvements where it's less than 25% of the property value.
Okay, brilliant. Thanks, Pat. So just kind of gone back on Maxine's question. Apologies.
Yeah.
So about the single skin.
Single skin. So we will accept a maximum of 10% to habitable areas. Habitable area, we would class that as something like a kitchen, a lounge, something like a porch, a utility room, a downstairs toilet, something like that would be excluded. And we have absolutely zero tolerance for any single skin above ground level. So the 10% is just ground level only. If there's anything first floor, second floor, that would take it outside criteria. And that doesn't include things like a loft extension with a dormer, because we know that by their nature they can be single skin, so that's not included either.
Yeah, no worries. And I think on just a separate point on that, I'm right in thinking if it sort of went over 10%, 11, 12, 13, maybe even 15, you potentially look to refer them to Phoenix as an exception.
Yeah, definitely. If it's a good case overall, I'm trying to think off the top of my head. I've definitely had a 14% approved. I can't remember if I've had any higher ones approved. But yeah, we're always looking, especially personally, it's what I get most satisfaction out of. If it's a little bit outside what's acceptable, if it's a good case overall, I would always look to refer it, see if we can get it past the funder. This is where something that we talk about a lot, that we call layering, comes into effect. So if that is the only thing that is wrong with the property, we've probably got a good chance of getting it through. But if it's got layer upon layer of adverse factors, so we're near a pub, maybe near a pylon, maybe in isolation all these things would be within criteria, but when you add 3 or maybe 4 near misses into the mix, it's less likely to get approved then. So this is when we'd the cases as a whole and see if we can build a positive case to the funder.
Okay, brilliant. So there's a point there as well. Was it raised by Libby, I think? Just bear with me. Can I not use the flood checker that each lender uses? It would save so much time, yeah. I suppose, unfortunately, each lender's got their own sort of appetite for flood risk and so on. So it's getting them all on the same page. How that they'd incorporate that, I'm not too sure. And I've had this feedback in the past. I know it's frustrating for advisors that you've got to be checking numerous ones. But if you did through, say, a source in an inquiry, we will come back and confirm. I'll put it in the chat, the one we use anyway in a moment, just so you've got it for future reference. So I think the one that Air uses does zone 1, 2, 3. But the one we use is you put the actual address in and it'll give you back surface water risk and rivers and seas risk. And like I said before, low to high surface water we can consider. Low on rivers and seas we can consider, and then medium high unfortunately is outside of criteria. If it's a medium high on surface water, we do add a condition, like I said, just to reiterate that fact. So as long as it's not flooded in the last 15 years, no loaded premiums. Yeah, I appreciate previously we didn't flood check, but yeah, with sort of things that have gone on recently with floods across the UK, Phoenix thought it was important to bring that into criteria, unfortunately. So, yeah.
Just to come in on that, Isaac.
Sure.
We try not to black and white underwrite. So appreciate Isaac sort of saying there. If we get a flood check back and it's high risk for rivers and seas, it's decline. Technically it is, but we don't just stop there. We do look into it deeper. I have had a case this week approved, which came back as high risk, but because there was mitigating factors surrounding it, I sent it up to the funder to sort of get a second opinion, and they did agree with me, and they've agreed to let it go through. So basically, that one, first of all, it was a block of flats, and we were located third or fourth floor up. So the chance of us being directly affected by any flooding was slim, although it would have possibly affect the block and affect insurance and things like that. I was able to sort of rationale that off because we weren't on the ground floor. Secondly, the river that was nearby that was causing the high flood score was probably about 20 foot below street level. So property had been built up on a bank, so it was very, very unlikely that the river would ever rise to that sort of level. I did some research, found no evidence that the river had ever risen to a sort of height that would cause the road to flood. Had flooded sort of the footpath either side of the river, but never the sort of the extra 10 or 15 feet it would have needed to get to the road. So when I presented all this to the funder, they took the same view as me, that it was one they were comfortable looking at further. So like I say, we won't just get high risk result back and just decline it. We will do further checks.
Okay, brilliant. Just hold that thought, Steve, because that's something we're going to touch on shortly in regards to spray foam. So that's in with the criteria changes. So bear with us. Unless you want to just go on to the criteria changes now, Pat.
We can briefly if you want, yeah.
Sure.
So
So this is due to land in the next week. Hopefully, we've not got it's not completely been signed off, but we're pretty confident to say that it will land pretty soon. So yeah, just wanted to touch on this because there's some good points in this. We reversed some of the changes that we did in October. So yeah, we sort of want to run through that, please, Pat.
so yeah, with regards to spray foam, I think the big change now is that we're going to need a structural report when there's been spray foam noted at the property previously that's been removed, but remnants remain. Whereas before we would sort of be led by the value, and now we will want a structural engineer to inspect to make sure that the roof is okay. And I think that brings us in line with other lenders and how they operate. Apart from that, it's sort of business unusual on the spray foam. What was the question? I'm not been able to access the actual questions after they've
So
popped
what is
up.
your stance on where properties have had spray foam removed professionally? What evidence would you require? So just I can't remember the actual qualification they needed, whether it's RICS, chartered surveyors. There was a couple when we had our meeting about the criteria, but just off the top of my head, I can't remember. So once we've got it right, and I'll get it over, and you can allude to who we will accept the report from. But yeah.
Yeah, I think there was a few different qualifications we would accept, and
Mm.
all tied in with structural engineers. So
Yeah.
yeah, if they can sort of confirm that the roof is okay, then would generally be okay to proceed on these. I guess a lot of it depends on why the spray foam was put there in the first place, because we know some of the reasons is to sort of extend the life, prolong the life of a sort of a roof that's coming to the end of its lifetime. Sometimes it's just been done purely for insulation purposes. So it's kind of like digging down into why it was done in the first place. That has a big bearing.
Yeah. No problem. We kind of touched on it, but criteria changes with regards to commercial, because I think that was for me part that was the big one that we've brought in.
Yeah, so the way it's going to work going forwards when this is introduced is there's going to be sort of two sections of criteria, and then within both sections there'll be three grades. So first of all, you've got commercial premises which are classed as directly adjacent. So that would be directly opposite, directly above, with boundaries touching in any direction. So that would be where we deem the commercial to be directly adjacent. Now, if it's a grade one, this is something that we can look to refer to the funder to get approval on. So it'd be something like a small local hairdressers, a small car garage, a convenience store, a village hall with licensed facilities, a post office, a commercial car park. Things like that are deemed grade one. And if directly adjacent and we can build a positive case, we would look to refer it to the funder. When I say build a positive case, I'm sort of meaning there's nothing else adverse with it, and we can find comparables in the area that support that saleability is not affected. So where commercial is directly adjacent and deemed as grade two, would be something like a pub, a supermarket, a small industrial unit, a larger sort of garage, an MOT centre, something like that. They can also be referred to the funder, but we would also need supporting evidence from the valuer to get that one approved. And then commercial directly adjacent that's classed as grade three, which wouldn't be acceptable, would be petrol station, large scale industrial units, sewage treatment plants, any sort of incinerators or recycling plants, and nightclubs, sort of large licensed premises, that sort of thing. And I think you can sort of tell from there that the concerns around saleability are due to sort of noise, dust, smell, the sort of disturbance that those sort of businesses would create and affect future saleability. So then we come on to the second grading of commercial, which is where the commercial's deemed in close proximity. So this would be where it's not touching boundaries, it's not directly opposite, it's maybe a few houses away, or it's maybe directly opposite, and it would be where the valuer notes that the commercial is within influencing distance of the subject property, and it's got the same types of things. So it's your small scale things are grade one, so a small convenience store, post office, hairdressers, beauty salon, that type of thing would be classed as grade one. We can sign those off ourselves, no referral to funder required, so that would just be something that we can progress as long as the value has been positive. Grade two in close proximity, so that's things like supermarkets, pubs, any sort of retail premise where there's a parade of shops rather than just a single shop, car dealerships, light industrial, there's a whole long list. Anything like that that isn't actually directly adjacent but's close, we can consider with a fund referral again. And then grade three, which is again is your sewage treatment plants, nightclubs, large licensed facilities, the recycling plants, that sort of thing. That would be a decline as well, even if in close proximity.
Yeah. So I suppose with the change, I appreciate that there is a lot in there with grade one, two, and three. Ultimately, you can use like the source and inquiry, obviously reach out to us. But this is a positive move for us. We will be looking at more commercial, and there is an element that we do want to not be referring as much over to the funder from the meeting I had with underwriting, that we will move away from uncertain, maybe like grade one when it's adjacent, that there might be, we'll be able to sort of sign off on those. But as you can appreciate, this is new. They are relaxing it slightly. So they still want, an element of control and, want to potentially see these cases. There's a question here from Mark. Pat, if you don't mind.
Yeah, of course.
So it appears to our advisors that if a straightforward case is rare, fair enough, the case will proceed quickly with standard life. However, you have mentioned refer to the funder on several occasions, and this appears to be the norm. What percentage of your cases are actually referred? Yeah, fair point. We do refer to the funder often, but in regards to percentage, I wouldn't be too sure. Would you have an idea, Pat?
I
And
mean, I'd be
ultimately,
plucking a
just
figure
to
out
add to that, we do refer to the funder because we want the case to proceed. It's not we're just checking, it's because we do want the case to proceed. It'd be easier for an underwriter to, and I don't mean it in any sort of way like that, but to decline it. We're trying to push it more and do more to say, these are the factors at play. Can we make an exception, or there's just certain things they want control of or final say on. So, but yeah, sorry, Pat, percentage
I mean, I'd
wise,
be plucking figures out of thin air,
yeah,
but I would imagine that when I'm just sort of just doing normal day-to-day underwriting, I'm probably picking up at least 10 new cases a day. I would probably say maybe one of those would definitely need to go to the funder for some reason or other. There
mhm,
might be another within that is technically a decline that I might like the case, that I would send it up to try and save it. So I'd maybe say 20%, but that is just a rough figure.
yeah,
Just to back up what Isaac said as well, I'm very proud of the reputation that I've got and the awards that I've won, and not just sort of the reputation I've got in sort of the industry, but also with our funder. So I only send cases up if I have to recommend it. I'm not sending a case up saying, will you accept this? What do you think of it? Sort of thing. When we refer, we're saying, we think you should accept this because, and then we lay out the reasons why we think they should accept it. Don't always agree with us, but we don't send up things that we know they won't want, because we'll lose integrity and we lose our reputation if we do that. So we're only sending things up that we believe in. So if we do get a decline ultimately, it's not for the want of trying. But we are trying to move away from referring so many things. It would be nice if they would sort of just let us make more of the decisions on the grey areas, but we need to sort of build this up over time. The whole change with commercial has come about because we've been trialing things, and we're sort of getting better at gauging what they don't want and what they do want. So I think it will move more positively over time. There's more and more things that we're able to just sign off.
excellent, thanks. So other criteria changes,
So
just to
the
show share
6 month
drainage.
ownership um, one, which is more of a sort of a support thing, but
Yeah, so
basically it needs to be either a true purchase case is not a problem, but if the case has already been purchased and it's coming to us as a remortgage and it's within the first 6 months, we will be having to ask a lot of questions about why it's been remortgaged already. And I believe, I've not seen the final criteria, but I think if there's any sort of bridging finance to pay off, I think that's now not acceptable. But
yeah,
I've not seen the final criteria that's been signed off.
yeah, indeed. So this was stripped out in October. I think it was on or November when the criteria changed, but we have brought it back in. It was something that we did sort of win a bit of business on. So there's some lenders that will and won't accept this. But we want it bought through sort of a normal means, whether it's through an estate agent or a private individual. We want to make sure there's no transaction undervalue involved, things like that. Like Pat said, no bridging sort of finance involved to purchase the property. How this is new, so we will be asking for further information like completion statements and things like that. But until we get more of these cases to say what will require, I can't really give you too much more than that. We did also change, or we are changing, should I say, our stance on adverse. So previously, we wouldn't allow them to use the funds to pay off the CCJ, but now we will allow for it to a maximum of 5,000. If it's a little bit more, then just let us know. We can, potentially look at making an exception for things like that. But that was the other thing, adverse too, that we made a slight adjustment on because it made to be honest, it didn't really make any sense to allow them to have a CCJ, but they can't use the funds to pay it off, so now they can pay them off. On adverse, as long as the CCJs are satisfied, that's fine. It's just the unsatisfied have got a maximum cap of 5,000, just while we're on it.
Yeah, I mean, just touch a little bit. I mean, I haven't got facts and figures, but the whole reason that this came in, it's things don't just come in on a whim. It comes in because of research that's done in the background, and there's a lot of research been done into our back book of where we're getting problems post completion, and where there was a lot of adverse. That was where the majority of our problems was coming from further down the line. So that's why the decision was taken that it was tightened up on. So like I say, it's not come from nowhere. It's come for a reason. Same with the home improvements. We used to be a lot more flexible on home improvements, but we had so many problems further down the line with half finished extensions, and we didn't used to check what they were building really in the depth that we did, and we'd find out it was just like timber and virtually unsellable extension had been put onto the back of the property. So that is why we've had to sort of tighten up on it.
Yeah, it's tough. I appreciate that we may ask more questions on home improvement, but I had a case the other day, and they'd released the money to do the roof, and unfortunately they run out of funds. You know how it is, the cost of things, and sometimes you go over budget. No, we did sort out the client, but there is times like where they'd maxed out the drawdown or their initial advance, then they kind of up a creek without a paddle. So it's just things like that to bear in mind, and why we are a little bit more diligent when it comes to home improvements, really. I suppose that was really it. Was that on the criteria part, or have you got anything else? I think they were the main changes.
Yeah, I think that was it, wasn't it? It's just commercial, little change to spray foam, the 6-month rule, the adverse. I don't think there's anything else. Might be a little tweak here and there, but like I said, until I see the finished result and we've got a definite date, everything's with a slight caveat that it could slightly change.
Yeah, there was shared drainage. I don't know if you've got that, but that's something we can look at moving forward. There is some caveats.
It's only on a new build estate though, I think.
Okay, on a new build estate.
It's not.
Yeah, well, we do get quite a few purchases on new build estate, so it's a potential one that will be helpful. I'm not sure how that aligns with other lenders, but we're good to know. I suppose from there then, the kind of process that we are taking more of a proactive approach when it comes to underwriting a case. Say we get the VAL report back and we sort of need more information because we want to get the offer out. What sort of things are you doing, Pat, at the moment, or what the underwriter's doing at the moment?
So we're trying to be more open and provide more regular updates. Appreciate frustrations, not knowing where your cases are at, not knowing why you haven't got your offer. So we are trying to put portal notes on explaining whether we've sent something to the valuer, whether it's gone to the funder and the reasons behind it. If once we get a valuer response back or a funder response back, we're still not in a position to proceed, we're trying to reach out to brokers and put a call in to actually discuss the cases specifically, what we can do to try and progress it, and sort of try and, as much as we can, talk around timescales of when we expect to be in a position to offer.
Yeah,
so
I think
hopefully some of you will have come across that and experienced it over the last few weeks, where, like I said, we're reaching out more, and hopefully that'll continue going forwards.
Yeah, I think it's important, especially in a rate up environment that we're currently kind of experiencing. I know it's volatile and it fluctuates, but obviously you've got 42 days from the application coming in to get to offer. So underwriting, being proactive and picking up the phone, is important. That phone call can make the difference of getting a rate of 6.5 or 6.75 if they've not reached out. And the feedback I get from brokers as well is that it's frustrating when you get an email from a lender, even solicitors and so on, and you literally respond within the minute, and then it's back into a queue. So there's times where just a phone call would make a massive difference to some of these cases, where you can just get the information there and then. So yeah, no, it's definitely a positive, and hopefully it will support getting offers out quicker, not going on to prevailing rate and things like that. So no, it's something that I think is a positive move with the also the pre-valuation checks. So yeah, it's definitely something with the feedback we've been given over the past, and we want to get these cases through as quick as possible, not just for us, but for yourselves and the clients too. So there's some good changes in there that we're currently working on, and some we've already brought in. So more proactive approach from us, to hopefully support a better app to offer and app to completion times in the long run. I think that's kind of it with the criteria, the checks that we're doing, the pilot we're running. So I suppose I know we've had some questions throughout, but just wanted to kind of open up the floor for any further questions if you've got anything for me or Pat. Well, okay, no problem at all. Well, appreciate you joining me and Pat. Thanks for your time this morning. Please reach out if you've got any other queries on the back of this. Once we have got the criteria changes approved, I'll get them over. Oh, there we go. A couple of dropped there. Good point. So thanks, Andrew. So currently, interest reward home improvements, Pat. It depends. If there's any form of retention applied, then no, we can't use interest reward, I'm afraid. But if there's no retention involved yet, they can use it for home improvements. It depends on what the a loft conversion. So Pat, just while we're on, would a loft conversion, would that require any form of retention, or do you think you'd be able to get the offer out on that?
I would say in the majority of cases it would need a retention, but I'd need to look into it specifically. It's one
Yeah,
that we could maybe swing it. It would depend looking at the case as a whole. I mean,
yeah,
just like quickly touch on this. It is something that's been looked into, and I don't know. It's a technical issue. I don't know where we're at with it, but basically, because the interest reward product is based on repayments, if we start releasing the funds in tranches, it can't deal with like the repayments and where the interest payments are up to, and when you drop another release on it, it's just not been factored into the model. It was only designed for a lump sum product. So we are looking into it, we're aware, but it's like I say, it's a technical issue on
yeah.
how we actually manage the interest payments in respect of like tranches of funds coming out.
Yeah, I think that, like Pat said, that's something that unfortunately, when there's a retention involved, we can't release the funds, retain funds, and then release the remaining funds just with the way the interest reward works, I'm afraid. So it is probably our limitation, really. That is something we are looking at, with this product, and it was launched last year. We've talked about it till the cows come home, and it's been really successful. I know there's other lenders with similar plans and stuff, and it's kind of the way the market's been trending to a degree. But yeah, we can do it on some. It just depends whether there's a retention involved, I suppose, would be the short answer on that.
Yeah, I think I
Um,
might be wrong, guys, but are we not looking at an interest reward for a drawdown product as well?
yeah, that is something we are entertaining, and
So
hopefully
I
that will
imagine
become at
once
some
we've
point.
sort of been able to work that out, we'll then be able to sort of look at factoring retentions into it as well. So yeah,
Yeah,
it's in the works, but
yeah,
otherwise
indeed.
we'll just have to consider it on the normal products if
Yeah,
there is
yeah,
sort of
exactly.
quite major structural improvements.
Yeah, so perfect. I don't think there's any other questions. So yeah, thanks for coming on. Thanks for your time, Pat. Really appreciate that. Hopefully, some good insight there. We've got a few more webinars coming up. So you've got one with Phil Calvert next week, in regards to lead generation, one with Phil in a few weeks in regards to consumer duty, and then there's one with myself and Sanjay to cap it off in about a month's time, just talking about payments and how can that support a better customer outcome. So feel free to jump on any of those. I'll get the criteria sent out when it's all available and signed off. And feel free to reach out with any cases you've got that you want us to look at. And, we are always receptive to maybe look at cases that are in that grey area, especially when it's high value. We can always I know I've said it a few times, but we can speak to Phoenix and see what they can do. And if they are receptive to it, I do spend a lot of time doing that sort of thing and see if we can get a case over the line that, the normal criteria dictates would be out of policy. So keep in touch. Thanks for your time this morning.
Yeah, just to follow up on that as well. I've made the mistake in the past of giving my personal email and even my personal mobile out and was getting calls at all time of day and night. I am more than happy to pick up the phone and speak to anyone if you've got any particular cases that are a problem. If you've got any pre-app queries that you want to run past us, but just sort of go through Isaac and then Isaac will filter it through me, because otherwise I'd just never get any work done if I was just open to just calls all the time. But I'm more than happy to have a conversation via email or phone or whatever you need if you've got a case that needs looking at.
Excellent. Thanks, Pat. Thanks everyone. Have a good day and hopefully catch up soon. Cheers.